This is Pete here. So today I want to talk about the latest bazooka, that the Federal Reserve brought out, right, to save the economy, save everybody. They want to save all the depositors, all the single mom that's working, all the poor and people. They are not saving the rich at all. No, I'm kidding. Actually, they are just bailing out the rich. But let's take a look. How is going to happen? What's going to happen here, and how can you benefit? So now, recently the Federal Reserve created a new program called the BTFP, right? I know it sounds very similar to BTFD, buy the something deep, right? But let me explain what this bazooka is, BTFP. So BTFP actually stands for the Banking Term Funding Program, right? So what is this funding program all about? Basically, in order to assure the banks they're going to have the ability to meet all the depositors, right, regardless your size. So previously, in my previous video, I talked about FDIC protecting you up to 250K, But in this case, you're going to meet everything. So even if you have $10 million in the bank, right, and you put all of them in one damn risky bank, which is actually your fault, they're going to bail you out, So the program will be an additional source of liquidity against high quality assets, right? This is to make sure that the institution do not need to sell these securities in times of stress. Now, why is this important? Because this was the exact reason that caused the Silicon Valley Bank or SVB to collapse. So what's going to happen is this, right? So let's assume you're SVB at this moment, you have all these government long-dated bonds that's maybe at $100 per coupon, But because the interest rate gone up, the yield has gone up, therefore your bond price has gone down to $80. But right now, at this moment, there are a lot of people at the bank calling, where is my money? They are asking you to give them their money. So, but because of this sudden liquidity crunch, right, you basically ran out of money, right? So what did SVB do is SVB went ahead to sell all these bonds, right, at a loss, right? They sold it at $80 when they bought it 100, and they lost $20. So for SVB, they didn't lose $20, they lose more in the tune of $20 billion. Now the government is saying, no, we're not going to let this happen. We're not going to let this happen. So what they did was they say, hey, instead of you selling it at a loss, what we're going to do is this. We're going to take all these bonds, right, as collateral, right? And they will lend you at the original price. So they call this at par, right? The original value of the bond at $100. That means who is taking the $20 loss? The Federal Reserve is taking the $20 loss, but they don't mind, because they want to save all the depositors. So what happens is that now the bank don't have to sell all these bonds at a loss. They can actually go and borrow this money and temporarily pay it to the depositors. And when the time is better, right, then they can redeem these bonds when they want to, right? So basically, the Federal Reserve is saying we're not going to let the SVB scenario happen again, right? Now, of course, for Silicon Valley Bank, this is already too late, But it's going to save a lot of banks going forward. So what does this mean? Number one is that I believe with this program in place, right, there's no more bank run, right? No more bank collapse in my view, at least in the United States, right? Why? Because the funding behind the FDIC, and they call it the DIF reserve, And basically all the banks and deposits, they will pay an amount to the FDIC each year, right, as an insurance premium to insure that initial 250K. So this insurance premium has been ballooning, since when? Since the last crisis, 2008. And the Federal Reserve is basically saying we're going to use this $128 billion to backstop everybody, regardless of your size. So it's not just going to save the small guys on the street with less than 250K, even if you have $250 million in the bank, and you concentrated all of them in one bank, all right, which is very, very poor treasury practices, by the way, right? And I 100% felt that they should be punished, But either way, the government is going to bail them out, They're going to backstop all this risky behavior. So the thing is this, right? I don't want this to be political. I don't really want it to turn into a left and right kind of political debate, but I want to focus on, as investor, what you can do, how you should invest, So number one is this. All the regional banks are taking a hit, right? And people are pulling out their funds to send it to where? To send it to what we call the GSIP. So what is a GSIP? Well, a new term, right? Don't worry. It's very simple to understand. These are basically globally significant bank, right? So GSIP are basically banks that has tremendous impact in the market. And basically the government is saying, if you're in the G-SIB list and you're in the top few, we will do everything we can to save you. Right? So even I myself, I would, if I'm in the US, I would want to send all my money to the G-SIB bank because I know that these banks will not collapse. So what are the G-SIB top few, right? Basically, your JP Morgan, Bank of America, Citigroup, HSBC, right? Even Bank of China is there as well, right? Quite high up the list. Okay? So this is what I think is going to happen. And that's why, right, what's going to happen going forward when all the funds are being pulled, right, from the regional banks to the G-SIB banks. Number one, of course, more funds are going to flow into G-SIB due to safety, right? And I think G-SIB is going to start to take over some of the banks if they continue to run into trouble. For example, HSBC in the UK has already taken over SVB UK branch, right? For a nominal fee of $1. So basically, HSBC got all the customer base and all the assets that's in the SVB UK branch. Okay, so that's very interesting. So this is going to allow the G-SIB banks to consolidate more power. So I think the banking sector is going to be even more concentrated across these main banks, right? And it's also going to get even more powerful because more customer database go to them. And we know that data is power, okay? Now, of course, we cannot stop this video without talking about the current bank that's in trouble, which is actually Credit Suisse, right? So Credit Suisse yesterday fell 24% in a single day, right? And it has not shut down yet. It has not gone into insolvency like SVB. So what about Credit Suisse? I just want to highlight that Credit Suisse is actually more like debit Suisse. You know why? Because they have not been improving their credit. They have been debiting their money out, right? Because they had so many poor investment in the past years where they lost billions and billions and billions of dollars. Okay? And on top of that, I just want to show you something, right? Number one, okay, is that in the G-SIB list, Credit Suisse ranked almost at the lower end of it. Okay, so whether the Federal Reserve will go and save them, I don't know. Okay, anyway, Credit Suisse belongs to the Swiss bank. Okay, the Swiss bank say that they're going to backstop Credit Suisse at this point in time, but how much do they have to backstop them? I'm not very sure. And the next thing is this, guys. I don't know if you remember this crisis called the Lehman Brothers. Okay, basically they were the bank that kind of collapsed. Okay, so I kid you not. Okay, I kid you not. This guy who is called Mr. Lehman, you can go and Google, right? Okay, he is the chairman of the board of Lehman Brothers. All right. Now, honestly, I don't think the name is the one that caused it to collapse. I show this more as a joke, but I just want to share with you that Credit Suisse overall in the long term, right, it is not the best bank. Okay, so I wouldn't touch it with a 10-foot pole, to be very honest. Okay, all right. So this is all I wanted to share with you guys for this session. I hope you guys got a lot from it. And I do believe going forward, the G-SIB bank is going to get more and more powerful, and they are really going to get more and more funds flowing their way. Okay, so that's all I have to share with you guys, and I'll see you guys next time. Bye.